Happy Thursday, everyone. We've got a couple updates today, Rocket Doctor, LEEF, Liberty Stream, and then Aduro. So there's bookmarks down below so you can skip ahead to what you want to hear. Rocket Doctor AI just closed an oversubscribed first tranche of its unsecured convertible debenture. It was proceeds of about 2.269 million Canadian. They say they're going to use that money for U.S. operations, general expenses. But what I want you to pay attention to is that it converts at 70 cents with warrants at 75. So this is above where the stock's been trading, and that is not typical, especially for something that ends up being oversubscribed. So the US growth plans are what I really care about. We know that in April, they only had 16 active physicians on the US platform, and they completed 1,144 US patient visits. With that, the company reported gross margins above 84%. So a little more investment on that US side, more doctors. I think that there is a lot of potential here just in the next couple of quarters. Then we have LEEF Brands. They report their Q2 earnings today. The conference is at 5 o'clock Eastern. And what I'm watching for, on the Q1 call, management told us that the Q2 margins would compress. So the demand for their product was greater than the farm's capacity to supply it was then. So they had to buy third-party biomass to keep the extraction lines running. So since then, they've been expanding the acreage aggressively. So a softer margin print this quarter wouldn't be a surprise, but it's actually the clearest proof point yet for the whole vertically integrated model that matters. So what I want to hear about is the trajectory. What does management say about margin recovery in the back half of Q3 as their own biomass returns? How are they positioning for interstate and international opportunities as the federal picture develops? I have a few questions for management that I'm going to try and ask on their conference call, and then I'll put together a full write-up after the numbers drop. Liberty Stream also has a webcast today. That one's at 3 Eastern. They recently closed a $20 million Canadian private placement, which they're going to use the money for continuing to develop their direct lithium extraction technology and their scale up at their Midland, Texas plant. But there was huge insider participation in this raise, and you all know the saying, many reasons to sell a stock, only one to buy it. Then we have Aduro. So a total of 6 firms have put price projections out for Aduro. I'm going to have to read some of this. So here's the board, oldest to newest. We've got Ladenburg. They initiated in November at $19. H.C. Wainwright in February at $22. D. Boral Capital reaffirmed in March at $46. Then in June, Ladenburg raised their own target to $24.75. We all know Roth last week in July initiated at $30. And then Water Tower just came out this month. They don't do price targets. They just don't publish them at all, but the numbers there are really interesting to look at. So the Ladenburg price raise is the one that I want to point out. It's the same firm, the same analysts. It's the same model, but they've revised it up about 30%. So when two firms disagree, that only tells you that they disagree. When one firm updates itself, something's actually changed. So all of these analyst targets, they don't agree on price. We've got from $22 to $46. That's a really big spread. But the part that I find interesting is Roth expects plastics commercialization in 2028 and paraffinic crude following in 2030. Water Tower modeled the first commercial revenue at the first of a kind, commissioning in fiscal 2028, and the real inflection at 2030. So 2 firms working separately landed on the same dates. They disagree on the price, they agree on the calendar. So their revenues build, and I want to be precise because these are Canadian dollars in their fiscal years, not calendar years. So very impressive though. For fiscal 2030, they're thinking 225 million. Fiscal 2031, they've got 464 million. And by fiscal 2035, they have them at 1.9 billion. So I'm going to let you build your own projections, think about what those numbers mean. But on volume, they model Camelot ramping from 5,000 tons a year at startup to roughly 160,000 by fiscal 2035. So that is another 225,000 across Mexico and Canada as well. So Those are their forecasts. It's not company guidance, and close to 80% of that fiscal 2035 revenue comes from bitumen and paraffinic royalties. So this is two verticals with no signed commercials agreements today, but it really talks to how the platform is expanding. So, but right now we've got the pilot running in London, Ontario. The focus moving through permitting. At Camelot, the Uinta Basin crude is secured and the continuous flow unit is complete. So the balance sheet is funded with no debt. So we've got 6 different firms. It's not a verdict, but it's 6 models with 6 sets of assumptions. So the calendar part is the part that you can hold them to, because permitting, final investment decisions, and first tons either happen on schedule or they don't. But I think this is really promising to have this consensus and all these opinions coalescing. And the market seems to be waking up to Aduro. So, do your own research and make your own choices. But this is my report for Thursday. Most of the big things moving in my portfolio. As always, I'm a shareholder of all of these companies. And again, do your own research.